I think it's a very sensible thing. And actually, it's setting up for something I think a little more complex that I've got my eye on. Is we've got an issue that staking is going to rise in ETH because it's got a good yield. It's reasonably understandable. So it gives us some sort of risk-free rate within the space. The issue is you've also got the ETH burning, and you end up with a very limited supply of ETH in a bull market. Now, I understand that that as the cost of compute goes up, what you end up with is less burning over time. But there is an issue that you could end up with a very squeezy market, and it could be a problem for ETH, actually.
Real Vision founder and former Goldman Sachs executive Raoul says that crypto could reach a huge milestone in the next bull market with 1 billion or more users. According to the macro guru, the surge in the capital will likely light up the nascent industry with innovation that attracts the next batch of users. As liquidity comes back into markets, we will see the next rise of the crypto story. And the crypto story will go from 300 million users to 1 billion users or more in this cycle. And there will be applications you haven't dreamt of or things you thought weren't coming. That will come at scale, whether it's digital identity, whether it's massive cases of Web3, whether it's DeFi, decentralized finance, or whether it's something entirely new. Whether it's ticketing via NFTs, non-fungible tokens. Who the hell knows? He said. In this next cycle, with the amount of capital that's been invested in this space, that's going to see yet another acceleration. The macro guru says that the Federal Reserve has likely already finished rate hiking in its attempt to reel in inflation. He also foresees a recession in the near future, which will ultimately force the Fed to reverse course and send markets higher via money printing. According to Raoul, this is exactly what happened in 2019 after the Fed pivot in 2018. The Fed is going to pause very soon or has paused. I think they have paused or certainly should pause. And we'll see this continued acceleration until liquidity slows down at some point, and then we'll have pauses in the market. We may even have pullbacks if liquidity goes back, which I don't really see. And then we'll see acceleration as we start hitting the recession and the unemployment side of the equation, which comes later when the real money printing and rate cutting really starts. Raoul also talks about the Bitcoin halving in the crypto markets. He also talks about the risks involved in ETH staking. Let us now get into the video.
The whole crypto market is driven by two things: network adoption, which is the long-term trend, and then in the middle is the liquidity cycle. The liquidity cycle hit a bottom in June, and we started seeing the forward-looking indicators come up. And we've seen already the central bank balance sheet was led by China, Japan, and then the US. That liquidity cycle is in full flow now. So that should continue all the way through till 2025. And that's why we started Crypto Spring. It happens every time we get to this point. So forward looking, the liquidity cycle should continue. And the banking situation is one of the examples of how the liquidity cycle comes in. The Chinese continue with M2 growth, the use of the central bank balance sheet. The Japanese have obviously been using yield curve control. So for me, we're in the right cycle now, and this should continue to play out. Now, within those, you get plenty of volatility. Usually you get 35% pullbacks are pretty common. Is this a 35% pullback we're in the middle of, or a shorter one? Don't know, don't really care. I did all of my allocation. I haven't sold anything ever. I just bought more in June, October, and January, and just used that opportunity into the big sell-offs, and that's it. The tightening, it's not about interest rates, it's about liquidity. So the change in interest rates is a part of the liquidity cycle, but the central bank balance sheet is the predominant driver plus M2. There is about a 90% correlation between the price of crypto assets and a global liquidity index that we use, which is a function of the G5 central bank balance sheets plus the Fed balance sheet. Look at the G5 central bank balance sheets plus their M2. So look at the central bank balance sheet there with the Fed, and you saw that little spike, which was the injection of liquidity into the banking system, and all assets rose with that. The interest rate rises are a red herring at this point.
Regarding the Bitcoin halving and price-driving crypto narrative, Powell made some noteworthy statements. Let's continue with the video.
It so happened that Bitcoin was launched exactly at the time that global interest rates went to zero. Everybody reset their entire interest rate and their entire debt burden at the same time. Everybody around the world. So every central bank, every country, every corporation, everybody reset rates at zero. It's created, and most of that debt is between 3 and 5 year debt. And what you've got is this 3.5 year cycle to 4 year cycle. and it's a global phenomena, and it was driven by interest rates being zero in 2009, and that is the Bitcoin halving cycle, because Bitcoin was launched exactly at that point as well. So the liquidity cycle is the predominant driver. Now, doesn't mean it's wrong to follow the Bitcoin halving cycle, because it happens to be the macro cycle as well, and that's all well and good, and if people understand it in those terms, that's fine. But it is actually the liquidity cycle that is global, and it is a complete structural change to the world that happened after 2008. That if you look at the ISM cycle, so the Institute of Supply Managers survey, it is exactly 3.5-year cycles. And we've never had this before. And it's just driven by the debt refi cycle globally. And people will move on the risk curve depending where you are. So when you're in crypto spring and there's uncertainty, you go to the safest, most secure, most known asset and the most liquid, which is Bitcoin. Then you tend to then spill out, and you see then Ethereum start to catch up. But as people become more confident in the cycle itself, you see it spread further out of the curve, and you're starting to see that already. I mean, Solana had a huge run this year. There's a few things that have had a huge run. It's not consistent yet. So it's very common that the Bitcoin dominance falls. It's the same in the credit market. People buy treasuries first, then they buy corporate credit, then they buy junk bonds, then they all blow up and we start all over again. I mean, it's a standard way that we operate. So it's very common. So crypto is no different than financial markets.
Bitcoin's downward price movement appears to have come to a halt as the leading cryptocurrency aims to establish a solid foundation above the $27,000 position. This comes just days after failing to sustain gains above the $30,000 mark. Despite the downturn, pseudonymous crypto analyst L_crypto_prof in a tweet on April 23 suggested that the losses might be short-lived. According to the analyst, historical data points to a potential bull run for Bitcoin, following what he termed as the end of smart money accumulation, which was signaled by the quantitative qualitative estimation, QQE, surpassing zero. Smart money is done accumulating Bitcoin. I told you a few weeks ago that once accumulation ends, we always saw a strong bull run afterward. And bears are happy about a few red candles, he said. Elsewhere, crypto trading expert and analyst Michael van de Poppe, in a tweet on April 23, also pointed out Bitcoin is still facing crucial resistance at $27,800. In this line, he projected that if Bitcoin experiences a lower test, it could lead to bullish divergences. Bitcoin still facing crucial resistance and rejected at $27,800. One more test lower would generate bullish divergences and opens up opportunities for long plays toward $28,700. Casual Sunday or Monday dump and reverse after. Funding rates are also finally resetting, he said. Meanwhile, as previously reported by Finbold, Bloomberg's senior commodity strategist Mike McGlone predicted that Bitcoin would likely experience a short-term pullback after plunging below $30,000. However, he remains bullish for the long-term outlook. Bitcoin's latest correction occurred shortly after the asset surpassed the $30,000 mark for the first time in about 10 months. This surge was attributed to Bitcoin taking advantage of the United States banking sector crisis and the optimism surrounding the Federal Reserve's stance on inflation. The correction has seen Bitcoin lead the broader market in short-term losses, partially in reaction to the high United Kingdom inflation data. This development has sparked concerns about higher-for-longer interest rates, which has contributed to the sell-off in Bitcoin and other risky assets. The author of the personal finance bestseller Rich Dad, Poor Dad, Robert Kiyosaki, is predicting a massive bull run for Bitcoin as he says more people are warming up to the top crypto asset. Kiyosaki told his 2.4 million Twitter followers 2 days ago that Bitcoin will soar by more than 257% from its then current value of $27,973. He predicts Bitcoin will eventually trade for $100,000, in part because he believes people will increasingly prefer the king crypto over the US dollar after a series of Federal Reserve interest rate hikes intended to draw down inflation. It also says that Bitcoin is fundamentally sounder than traditional financial institutions like banks, which have received government bailouts to remain afloat. Things seem bullish for the crypto market regardless of a few fallouts and immense pressure from anti-crypto organizations. The war between fiat and cryptocurrencies rages on as the altcoin and meme season settles in. How do you think Q2 will play out for cryptocurrencies? Let us know what you think in the comment section below. Also remember to give us a thumbs up, subscribe, and turn on notifications. Thanks for watching.